Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we're going to go over a technical analysis trade breakdown that I placed on XRP as well as GBP. I'm going to show you guys screenshots that I shared with the CYPRX students, breaking them down, my perspective of the market today, and then give you guys an overall analysis on why it is that I was placing the trade and why I was looking at such areas of interest. So before we start on XRP USD, we're going to go over to GJ and I'm going to cover that trade breakdown for you guys. But first, I want to show you guys in the CYPRX group chat, I had mentioned to the CYPRX students at 5:09 a.m. that if we go bearish, I'm looking for a pullback into the psychological level 162.100. So here on the higher time frame, we have GBP JPY. I'm going to take you guys to the 10-minute chart first, and we're going to open up the higher time frame split screen method. And I want to avert your attention to when I sent that to the CYPRX students at 5:09 a.m. here in California. That was right here in this general vicinity. And the reason why I sent that to the CYPRX students was because we were building this area of supportive methodology trading beneath these lows prior to the New York session. We're in the manipulation window, right? If you guys don't know, you guys don't follow the YouTube channel, make sure that you do so. But we talk about a manipulation window on the YouTube channel multiple times, happening prior to every single session. Okay, now that just so happens to be right before New York session, as well as London and as well as Asia. But in that manipulation region, you can see the double bottom formation form, which is a retail pattern trap. So when we had this little tiny bullish pump at around 5 a.m., I had mentioned to the students that I entered into a position here, but if we don't see a reversal here, then this is not the pump, and I'm going to be waiting for a pullback on the higher time frame. Okay, I said to the students at 5:21 a.m., if we can't break the 163 psychological level, this isn't the pump. My stops are at break even. So I told them that I entered into a position here just in case the market did decide to capitulate here and come and take out the liquidity above London session highs. However, we failed to do that, and I also had let them know that I was looking for the targets of 162.100 for price to pull back in, which is the current position that I'm currently floating in. Stops are moved to break even. I made roughly around $4,000 on this trade before I took profit. I'm currently floating in this trade with about 0.25 lots. I opened the position with 20 standard lots. Now currently looking to see if we can roll over. However, this is now a risk-free trade. Already taking partials, made $4,000 in a day, very simplistic, around 35 pips. Now I'm going to break down to you guys why I was looking at these areas of interest, okay? So just showing you guys the screenshots, showing you guys multiple times that in the GJ chat, in the CYPRX community, we are extremely accurate with our price analysis, and that is mainly based off of logic. I hopped on a Zoom call with the students this morning, and I had mentioned to them that if we, again, do not break the 163 psychological level, which over here to the right-hand side, if you guys look right, okay, is this psychological level right here. We were going to most likely dump into the 162.100 psych level. Now, why was I looking at that target? That's the question, right? That everybody has. How do you get these targets, Cypress? Well, if we look over to the left-hand side, we can see that this is where Asia's session opened at, okay? This is also where the daily candlestick opened at. So, logically speaking, this would be the area that we would need to break below and have a bearish close in order to confirm any type of bearish reversal. And if the market cannot do that, then what are they most likely going to do? They're going to take buy positions in the form of discount from where they bought from the previous session. If you guys pay attention, I talk about New York session, London session, and Asia session, putting in two positions in the market every single session that are the most crucial and important to pay attention to. Well, here you guys can see a nice bullish move during New York session the previous day. And here you guys can also see a second nice bullish move during New York session the previous day. So these were two areas of interest. Here's the screenshot that I sent to the CYPRX students telling them that these were my areas of interest on GBP JPY that I would be looking for buys from. And one of those areas happened to be at the 162.100 psychological level. And as you guys can see, we tapped into that, and now we have potentially started the reversal back to the upside, okay? So now that you guys have my higher time frame analysis, I always come onto the charts. I go from the 4-hour to the 1 hour down to the 15-minute to get my higher time frame bias. I look for discounted areas and premium areas on the higher time frame. That is what, in my personal experience, is going to give you the best bang for your buck, which is trading in tandem with what the higher time frame is telling you, and not off of what lower fractal price action is telling you, because 9 times out of 10, the fractal price action is going to manipulate you and steer you in the wrong direction, okay? But now you guys can see the split screen methodology. how this area of interest correlated to the right hand side, I'm just going to take this 162 psychological level, go ahead and sync it to my chart so you guys can see that that is where on the lower time frame the market tapped into. Now we'll go into the lower time frame analysis. Okay, so you guys can see that I was patient enough to wait for that psychological level to come into fruition based off my higher time frame analysis, understanding that if the banking institutions for New York session are going to purchase, most likely what are they going to do? Well, we see that New York session got past price action at a high. How did they get past price action at a high? Because if we look at where the previous day's worth of price action bought from, we have to understand that where they got past price action, which is all the way up here at around 163 psychological level, okay, that is not at a discount from where they bought from the previous day, which would be down here at around 162 or even below that at around 161 200, looking to the right hand side. So logically speaking, when the banking institutions got past price action during New York session, we know already based off of previous information that I've told you guys that they are not going to buy from a high. They are going to manipulate price to give themselves discount, sending price lower and attacking liquidity beneath premature buyers or people that have sell stops beneath these lows during New York session manipulation window. And that is exactly what they did. They completely tanked price to give themselves discount from where they bought from the previous day, okay, to add in an order and liquidate all the money that lies beneath these lows in the form of trendline liquidity. Again, going over trading against the retail methodology trading mindset, we can also see a major area of trendline liquidity in this general vicinity, okay? You guys can take your little tiny projection tool, you can measure this out, you can see that there is so much liquidity beneath these lows. All of these lows have sell stops beneath them and have over leveraged buy positions beneath them in the form of trend line chasers. So utilizing all of these confluences, understanding that on the higher time frame we were potentially operating at a discount area. Here again is that purple line that I sent to the CYPRX students telling them that this was my area of interest around the 162 100 psychological level. You guys saw that how on the higher time frame previous day New York session bought from this 162 100 psychological level. So logically speaking, if we hold above this psych level, we were most likely going to see some type of bullish environment, right? So with that logic being said, now jumping down to the 1 minute chart, we can see that bullied push down into the psych level. And this is exactly what I teach you guys to pay attention to on the channel. Here is the grab of liquidity beneath the low right here. We see the market bully its way through a psychological level and through an area of liquidity. Immediately following that, what do we get? A bullish match of momentum. You guys can see this bearish push right here was matched with bullish momentum. So we have to understand what a liquidity grab looks like. This is exactly what a liquidity grab looks like. The market makers are the only people with the amount of money to make this pattern. Here's exactly what I teach you guys on the YouTube channel. We see a low, we see a high. We see that low get violated, and we see an equal match of bullish momentum. After that, what do we see? You guys, look at the entry right here. We see a higher low after the grab of liquidity that leads to a market break in structure. This is the pattern right here that we look to aim for at CYPRX when we're trading the market. Why? Because this is an identification to us that the market makers are in control of the market. Now for me, I'm a little bit more confident in trading this strategy, so I entered a little bit early at the higher low after the market grabbed liquidity. But if you are not confident in your analysis and entering this early, what could you have done? Well, check this out. After the market grabbed liquidity from a low and created a higher low, where are you taking your Fibonacci from? And how could you have got a little tiny buy scalp with a risk reward ratio of a 1-to-3 right here in this general vicinity? Where are you taking your Fibonacci from? Again, from the higher low after the grab of liquidity that leads to a market break in structure. You guys can see that all of this structure broke previous market structure highs, and we have a higher low after the grab of liquidity. So you would take your Fibonacci from the higher low after the grab of liquidity, extend that up, and you guys can see how the banking institutions gave themselves discount again of anywhere between 70 to 79%. That was a proper risk reward ratio, placing your stop loss either safe stops beneath the liquidity grab or beneath the higher low that formed that sent price higher, breaking previous market structure. These were two beautiful trade entries utilizing the CYPRX methodologies, top-down analysis that you guys could have capitalized on. I know that the CYPRX students did. You guys can see in the group chat that a lot of the students entered into positions, the same position as myself. Blessings to you guys. I hope that you guys enjoyed this one single video breakdown. Let's jump over to XRP and we'll go over that. Take a second, you guys, and make sure that you all are subscribed to the YouTube channel. The channel is growing significantly. We really do appreciate it. Smash that thumbs up button. It does help boost the YouTube algorithm. And if anybody is interested in learning this strategy in extreme detail, the link is in the description down below. You can go ahead and visit CYPRX.teachable.com. You do have to enroll in the mentorship program. It is a one-time fee. It is not a monthly fee. It says that on our website. People have emailed me asking me if it is a monthly fee. It is not. It is one single fee that gets you a lifetime access to the CYPRX mentorship. And everybody that does take the initiative to excel in your trading journey. Let's go over this XRP short that I'm currently floating in. We should see the market roll back down into 40 cents. That's at least where I'm looking for this market to dump down into. And that's mainly because we can see areas of interest where New York session purchased from the previous day that they're most likely targeting to give themselves discount again, which is here in this area where we are currently operating at. And if this market session low breaks, where are we most likely going to dump price down into? Back down to the previous day's New York session lows. So having all of this in mind, to take this short position, I was thinking as above, so below. What are the market makers right now telling us? Well, they're telling us that they have a willingness to grab liquidity from highs and send price lower. Okay, that's 1 day's worth of price action where they did this type of manipulative move, where we can see they build liquidity above an Asia session, London session grabbed that liquidity, and New York session shorted. Well, look here. Here's the same pattern. Okay, it's just different, but it's still the same pattern. We see Asia session build liquidity. We see the market makers grab the liquidity above that high and make a new low. So all I was thinking was that New York session got past price action at a high. You guys can see that here. Okay, and they're most likely not going to buy from a high. What are they going to do? They're going to manipulate price down to give themselves discount to where they bought from the previous two sessions. And you guys can see how that logic played out to the T. We see bearish order flow meaning that the market makers are showing us a willingness to grab liquidity from highs and make new lows. Grab liquidity from highs and make new lows. So logically speaking, coming into this New York session, we had areas of interest that we would need to break to confirm any type of bullish reversal, which was this high here and this high here. Why? Because this is where the daily candlestick opened, and logically speaking, we know that the market makers are not going to buy from a high. So piecing all this together, we understand that the market makers like to sell from a premium. Well, if we look at where the banking institutions sold from Asia session and London session, what did New York session do? They pushed price up into premium from where London session sold from. They sold at a premium, and most likely before they buy again, they're going to push price action down to the most discounted price that they could possibly give themselves. Now, is this a significant area where they could buy from? Absolutely. Why? Because they bought from this area the previous day. However, in my personal opinion, we are making equal lows at this point. And if the market cannot capitulate and show us a sign of bullish momentum to start to break fractal structure highs and make higher lows, most likely we are going to roll over back down to the 40-cent psychological level where the banking institutions purchased from on XRP the previous day, which is generally in this vicinity. Maybe even if we break that level, we could see a market dump back down into the 37-cent psychological level where we can see banking institutions going over the area of interest that I told you guys in previous breakdowns where I entered in at, the banks could push price action all the way back down into. And you guys can see New York session purchased from around 37 cents here, same thing here, same thing here. So if they do dump the market, you guys have to understand what could they potentially be doing? Giving themselves discount to then flood the market again with buy orders. Okay, again, this is how the market moves up and down. So many people on a general basis don't understand this, and they just go onto the charts. They give you guys these Fibonacci perspectives and these unrealistic bullish predictions. You guys have to understand how much money is to be made on a day trading perspective if you're just looking at this as a scalping market, taking trades on an intraday level from swing high to swing low. Paying attention to what the market is telling you, you can really capitalize on some very decent moves in the form of leveraging XRP in the form of buying and selling. Now for me, I like to trade leverage XRP utilizing CYPRX. I mentioned that to you guys in my previous video. They offer anywhere between 1 to 100 to 1 to 1000 leverage. I'm almost 110% sure. I use 1 to 500 to trade XRP, very small lots, anywhere between one standard lot and micro lots. In my personal opinion, it's plenty to grow a small account. Not financial advice. Again, you guys, that link is in the description down below for the mentorship. I hope that these trade breakdowns helped you guys out, giving you guys some gems, really showing you all how you can capitalize on market movements every single day. You just have to be patient. You have to understand pattern identification. You have to understand logic in the market, piece all that together via what the higher time frame analysis is telling you guys, and you guys can come out on top in this market. Blessings to you all. Make sure that you guys subscribe to the YouTube channel on your way out the door. As always, be cognizant, be aware, and I'll see you guys in the next video breakdown.